Joining me to discuss BTC price and other Bitcoin news is our Week in Review panel. CoinDesk Managing Editor of Technology, Christy Harkin in Toronto, and markets analyst Dominic Dantas joining me from New York. Welcome, Dominic and Christy. Happy Friday.
Hello, happy Friday.
Happy Friday.
All right. So, Dominic, are we entering that 7-week losing streak? Will that continue on into an 8-week losing streak and then a historic record for Bitcoin?
Yeah, it looks like we're ending off on a downer. So that will be the 7-week losing streak, which is, I think, the most in history. So it's definitely, reflecting the negative sentiment. It's also similar to what we're seeing in equity markets as well. Volatility did drift down a little bit over the past few days, but then came right back up. It's just been really back where you started. The weekly returns are pretty much flat, down about 1% for now. So it's just been up and down, up and down, up and down every day. So what that does is it just creates a lot of noise. And you really got to take a step back and look at where the trend is going. And right now the trend is pretty much negative. And there's a lot of just fragile market conditions. And like you said earlier, the puts buying just shows that there is some uncertainty embedded in the market. And traders right now are just taking their downside protection. And that's fear.
Mm-hmm. Also, earlier this week, we heard a few hawkish comments from the Federal Reserve. So there are concerns about more rate hikes, 50 basis points in the upcoming FOMC meetings that could potentially... Do you think that's already priced in the markets right now, or do you think it could go lower?
No, it's been priced in over the past few months. They've actually done a good job at, creating this environment where people are expecting rate hikes, even before they actually materialize. So that's already been gradually priced in. But over time, what it does is it creates the present value of those high growth companies a little bit less. So valuations tend to compress into a rising rate environment, and especially with rising inflation. So you could get, some downdraft over this year at least, and as you enter in sort of that recessionary mode. Typically in late cycle environments, the asset classes that are performing typically perform well in this environment, and those are your inflation hedges like commodities and gold. So we're actually seeing things defensively play out as they would in this type of macro environment. So it's as expected.
Yeah, it is surprising how closely Bitcoin is trading with U.S. stocks as well. I mean, this morning, U.S. stocks were up. They opened the markets session in the green, and Bitcoin was over $30,000. Now the markets are down in the red, and it appears, S&P 500, Dow Jones, Industrial Average, and NASDAQ are down, and Bitcoin is now down. I'm wondering, are you seeing anything? Also, what I find interesting is that Bitcoin dominance is up.
Yeah, so that's another sign of risk off. So it shows that even though you get these up and downs movement in the prices, when you take a step back again, it's showing that there is this embedded risk off sentiment. And typically when Bitcoin declines less than altcoins, it shows that there has been some risk aversion of sorts between the traders, and we've been seeing that play out over the past week. And that Bitcoin dominance ratio is now around, I think, 47% the last time I checked. If you get a sustained move above 50%, that's on par with what we saw in the bear market in 2018.
Wow. And so finally, where do you see support and resistance at for Bitcoin? It's been pretty level between 29,000 and just above 30.
Yeah, exactly. That hasn't changed much. That's a pretty fragile zone right now. If we get a break below that, the next level is around 25, and then again 17, which is about a 70% peak to trough decline. The past peak to trough decline that we saw in 2018 was about 83%, so almost there. That might trigger some capitulation of sorts. But we'll see where things go. And circling back to your earlier question about the macro conditions, the Fed tightens into this scenario. So when you tend to get rate hikes, there is like a threshold of sorts where it disrupts economic growth. We're not there yet. And a lot of those recession indicators are very, very low. So, at most what this is probably a stagflationary slowdown type of environment. And for investors, it just means valuations compress, and you get lower returns than what you were used to in a low rate accommodative environment. So just adjust your expectations.
All right. Thanks, Dominic. Also, we've been tracking the Terra Luna collapse from last week. And this week, the Luna Foundation Guard explained how they spent the $2.6 billion worth of Bitcoin that they had been accumulating over the past couple of weeks to, avert the kind of collapse we saw last week. It didn't work, unfortunately. So all that Bitcoin was sold for what is now worthless UST, their algorithmic stablecoin on the Terra blockchain. And, there are a lot of questions about what the impact that has, if any, on Bitcoin. Who was the counterparty that sold that billion-dollar stash of Bitcoin for UST to the Luna Foundation guard? So that still remains a mystery. Also surprising this week, we learned that China, despite a ban on mining, is continuing to mine. Cambridge came out with a study showing that just over 20% of the hash rate in the world for Bitcoin is still linked to China despite this ban. Christy, can you tell us more?
Yeah, so we've spent a long time over the last year talking about China banning mining and the various reasons why and how that affects Bitcoin mining in terms of centralization, in terms of hash rate, its security. And of course, we know that Bitcoin's security has been absolutely stellar in spite of losing a whole chunk of its hash power over the last year, and then coming back super strong all over the world. And so we've recently this week seen some new data from Cambridge that has shown us that, in fact, there is mining happening in China, and quite a lot of it. Why? How? We're not 100% sure, but we do suspect that it's been there to some degree all along. Perhaps miners were using VPNs in order to obfuscate where the mining was happening. But it's not like they just uprooted everything, shipped everything all the way over to somewhere else, and then decided to come all the way back to China. That is a logistical non-starter, I would say. But we are seeing the hash rate sort of dispersing out of where we thought it was and back into China. Whether it might be because they're less worried about it, maybe China's attention is diverted elsewhere, the government's attention diverted elsewhere, but it's there now. Or at least the mining is there now. But it has served really to show that we can still diversify where the Bitcoin mining is happening around the world at a moment's notice and keep security up. So it was certainly an interesting development, but we also kind of thought that might be happening. We did talk a little bit about that there may be some surreptitious Chinese mining going on, but we didn't really know until the data came out. And now it's out, and now we know.
Yeah, they're the second largest, mining provider of Bitcoin and its global hash rate in the world. So very impressive. Of course, when we speak to folks in China, like this morning, we spoke to Hobie about Chinese mining, and they said, no, they've left China. They're in other countries now. But obviously, on the down low, the truth is there is some mining going on, which is really interesting, really fascinating. And yes, as you say, it accentuates the decentralized nature of mining in Bitcoin. So very cool beans. Also this week, we learned that Argo blockchain reported net income of just about over $2 million in the first quarter, which is a drop of 90% compared with the same quarter a year earlier. And that's because Bitcoin price has dropped. So it was $40,000 for much of the first quarter compared to nearly $60,000 in the same period last year. So, miners are going through a rough patch right now.